Selecting the lender that gives you the lowest rate quote under the assumption that they care whether your home buying experience is a nightmare or even if you close at all is a mistake people make often. Low rate quotes and claims of an easy process is what lenders tell you to draw you in to keep you from noticing the reality. But a good lender can actually get you the best rate you can get, make the process smooth, and close on time. And that lender is more likely to ask questions of you than give answers or make general claims. Here's a basic list any good lender will likely be asking because it's what they need to know to determine a relevant rate for you. People seem to understand how timing impacts the price of gas, but not mortgage rates. It's very similar. Rates, like gas prices, can move every day and sometimes multiple times during the day. They move whenever the market moves. Yesterday's rate is as irrelevant as last year's. So you should get rate quotes typically no further apart than the same day from whoever you're considering. A mortgage rate quote versus reality can change overnight. A rate lock is what keeps your rate available to you through the time your loan gets closed. Longer rate lock periods typically yield higher rates, and shorter locks lower rates. So a 15-day rate lock would probably be a lower rate for you than a 60-day rate lock. The problem is your lender, your builder, you, your seller, etc. all have to be able to close within the rate lock period, or you may have fees or even lose the contract on the home. So if your lender quotes you what a rate lock on a 15-day lock would be, and you're buying a newly built home that's not closing for 6 months, you're completely wasting your time. Your score can earn you a better or worse rate, or disqualify you altogether depending on exactly what it is. If you're in the process of improving your score, shopping rates will be difficult because no rate quote will be the same. If everybody is pulling your credit, you'll be wasting your time too because your score could drop with multiple pulls. Your down payment relative to your budget largely determines what loan product you'll need, which will also greatly determine your rate. The down payment also determines what is called the loan-to-value ratio, which also determines your rate. What your down payment is can also reduce the rate because of how PMI is paid if your down payment or loan product or structure doesn't eliminate the need for it. The loan product is huge. Different loan products have completely different terms and therefore different rates. The loan product variations could be vast. Is it a fixed rate or an adjustable rate you're wanting? Adjustable rates are usually always cheaper, but the rate can change after a certain fixed period. When the rates can adjust down or up, which then means that your payment can go down or up. What is the term of the loan you want? 15 years, 20, 30? A rate that adjusts after 5 years, 3 years, 10 years? Major differences in rate here also. A condo may require a higher rate than a regular house. A duplex you plan to rent out may require a higher rate than a condo you plan to buy and live in yourself. What type of property you're buying is a very crucial part to disclose, as well as your intention for the property. While rates and closing dates are easy to speculate, a great lender is more than an interest rate. They are also a great logistics manager. Getting a loan closed on time is not an easy task because of all the factors that are outside of everybody's control. A good lender will ask questions about the deal or your situation if they are intelligently answering your questions about their rates or fees.